This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning. Global cues are a bit quiet. It has been a little quiet, sideways to down over the last three sessions. Can today be different? That's the question. We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Morning.
Hi, good morning, Prashant. Good morning, Nigel. Well, things are not looking that great, right? It's been sticky for the last couple of days. Let's see which way it goes.
Well, par for the course, I think. Let's get straight to the action.
And there's not very much action to report, actually, because it's quiet. And, the US market has been giving us positive cues for the last couple of days, but not last night. I mean, so last night, it actually was very, very quiet with, indices up on your screen. I mean, the S&P 500 was up a little bit. The Nasdaq was down a little bit, but not very much so as to really take away in terms of what we want to do. In any case, I mean, the market here for the last three sessions has not been taking cues from global markets. I mean, global markets, if anything, have been pretty positive, pretty healthy. But here, there has been a soft but sure kind of drift down, which has happened. I mean, we've opened higher, we've opened flat, but eventually for the last three sessions, starting last Friday, the market has come off. Now, yields and dollar, again, not very much. Yields were, about a 3 basis point change on the 10-year. The dollar index went up a little bit, but about 0.25%. It's fallen quite a bit, about 105 from 106 levels. Oil prices, the Brent, of course, a variety at about 83. So, it's kind of quiet out there. You had one comment. It was basically a data-less session overnight in New York, but you had one comment from, a Fed governor who essentially was unsurprisingly hawkish. I mean, he is someone who is known to espouse slightly hawkish views. He said, while rate hikes are not the base case, but they can't be ruled out. I don't think the market took any big kind of signal from that, because as you can see, the rates market, neither the dollar market reacted in any large way. Small reactions, but nothing more than that. So, that is really the cue from the global picture. You also had the phase 3 results, phase 3 polling yesterday, voting yesterday here in India. And there, you essentially have a situation where, the turnout, this is as of 11 p.m. last night, is once again lower. There's about a 3% drop in polling in the seats which went to poll, which are 93 seats, as compared to what we saw in 2019. And this follows a pattern we've seen in phase 2 and phase 1 as well. And there is a fair bit of hand-wringing, etc., which is going on in terms of what it means. Okay, let's just sort of circle all of this back to levels. There's not very much which has changed in that sense. The Nifty, day before yesterday, it closed below the 20, and yesterday it closed below the 40-day exponential moving average, which is, as of yesterday's close now, the fresh level is 22,310. We left off at 22,302. That is the absolute first kind of pivot in that sense. If we do continue to slide lower and the level remains the same, the 61.8% retracement of the rise that we saw, the latest rise that we saw is 22,166. That's the next logical kind of level which we get to. It's about 140 points away from where we closed yesterday. On the upside, the 20-day moving average is sitting at 22,444. And if there are bounces, etc., that's the first level to kind of try to take out. On the Nifty Bank, again, we broke, supports yesterday. And the Nifty Bank closed below the 20-day, which now, as of yesterday's close, stands at 48,410. We left off at 48,285. So about 120, 130 points off that level. And breaking the low that we saw last Thursday, which is 48,088. We've not done that yesterday. We basically look at the 40-day exponential, which stands at 47,887. These are all very sort of nearby levels, all within the vicinity of 2%, 1.5%, 2% or so, both for the Nifty and for the Nifty Bank as well. I think it's a quieter kind of a session that we are going to watch. We're going to see today. The GIFT Nifty will come up on your screen. It's indicating a 12-odd point higher start. And I think, as I said yesterday as well, and the day before yesterday as well, what's on the market's mind is elections. I just say one interesting thing, though. So if you look at the last sort of two phases as well of elections, on the day of polling, the market sold off. And then after that, the market starts to try to recover a little bit. So we'll see if that is the case. But in any case, don't expect any fireworks, any large moves. It's going to be quiet going into the election results, which is still some distance away, early June. Sonia.
Yes, it is. And but I guess, the market is feeling that pressure, right? Or that trepidation. You're seeing it in the last couple of days. The one thing that I've noticed is that this market is decoupled from global cues. So while the global markets are chugging along, our markets are facing some volatility, and it's largely because of the election outcome, perhaps some jitters ahead of that. So there's been a third straight day of selling by foreign investors. Yesterday as well, FI sold about 3,668 crores, and the markets are also down for 3 straight days. Yesterday, in fact, the broader market sell-off is something that was very worrying. The mid-cap index was down almost 2%. So just be a bit cautious in the broader side of the market. If this sell-off continues, then maybe there could be some more pressure over there. Now, as we've been saying, it is largely election jitters that this market has ahead of the counting day, which is on the 4th of June. But until then, there are, of course, plenty of stocks to look at as well. And the numbers have not been bad, to be honest. If you look at it, Dr. Reddy's stripped off the one-offs, this was a decent set of numbers. The India business for Dr. Reddy's went up 11%, so not bad. Valuations are also looking quite attractive, so the street might like that. Pidilite has seen good numbers as well. The entire consumption basket has picked up. Volume growth of almost 13% is not bad in the consumer business, given the kind of challenges that we've seen. United Breweries, decent set of earnings, volume growth of almost 11%. So that's another stock that I'm looking at this morning. Maybe the street would like those numbers. Only pressure point would come into Voltas because, Voltas' stock has been rising quite a bit, the scorching summer and all of that. But look at the numbers. It's really disappointed. I mean, the operational pressure is very visible because the losses from the EMP business remain quite elevated. So that's something that, may see some pressure. In any case, it was down 4% yesterday. Today is a big day of earnings for the auto sector. You have Hero, TVS Motor and Bharat Forge that will be coming out with numbers. So my, eye is going to be on that squarely. But Nigel, on the market overall, looks like there's definitely some pressure.
Well, that's right, Sonia. Some pressure, but I think we're at the lower end of the band that we're talking about, the 22,200 on 22,750. So let's see whether or not there's a bit of a bounce at around the 22,200 odd mark. The Nifty Bank, that'll play out the weekly expiry as well, so that's going to be important. And the turning factor for me today is going to be, or the swing factor is going to be Reliance Industries. So we'll have to keep an eye out on that stock as well. Let's get straight to what the FIs did in the F&O market in yesterday's trading session. They unbound some longs, 12,000 contracts. Shorts were added close to 18,000 contracts. So the swing factor out there is close to 30,000 contracts. So they were net short. Now they've gone deeper into that net shorts. And as I always say, you like that. You want to see a market that's net short. It gives you a reason to see a bit of a bounce. We're a bit of a distance away from that 1 lakh contracts, which is the crucial mark when you want to see a bit of a bounce. But for the time being, the short positions did increase in yesterday's trade. What about the options data? Well, you had aggressive call writing, 22,500, 22,400, 22,300. Between them, more than a crore shares getting added then. Because of the aggressive call writing that we're seeing, and since the markets are a little bit jittery, you have the PCR that's come down to around 0.78. So crucial number you're looking at on the PCR is 0.7. When it normally moves to around 0.7, you have seen that there is a bit of a bounce in store. For the time being, the PCR has come down to around 0.78 odd. And the volatility index has been spiking up. In the last few sessions, well, the volatility index has gone up by close to around 70%. From around 10, it's moved to around 70. There are two schools of thoughts. One is this market is getting a little bit nervous. The actual factor could be maybe we're seeing a repeat of 2019. Even at that point of time, the Nifty saw a sharp correction of close to around 500 points on a lower base. And the VIX did spike up by more than 50%. And post the election verdict, well, in fact, the VIX came down to lower levels than what we saw prior to the election. And also the Nifty, well, it recovered to higher levels in comparison to, what we saw pre-election. So, so I think for the time being, you'll have to read it as it's a repeat of 2019. Some of the street getting a little bit skittish. A higher VIX basically tells you they expect volatility to pick up and you can get whipsawed on either which direction. What are the levels you're looking at then in today's trade? That's the broad range for you. Reference point 20 DMA, that'll become important if we see a bit of a bounce. So first reference zone out there. On the downside, the 100 DMA is what I'm looking at. The Nifty Bank, since that's playing out the weekly expiry, well, you'll keep an eye on a few factors. The 20 DMA is important on that one. And the 50 DMA, which is a little bit deeper, closer on 400 points away from current levels. Reliance Industries, as I said, could be a bit of a swing factor. In the last few sessions, it's been a relative underperformer. It's corrected close to around 5%. The Nifty is down 2.2%. Now, it's very, very close to around that 100 DMA. So it's going to be important to see whether or not Reliance Industries can see a bit of a bounce. It was the market favorite. If the bulls need to bank on something, I think Reliance Industries will have to come into play, and the Nifty Bank as well will have to see a good close to this weekly expiry. So let's see how that goes.
Okay, thanks a lot, Nigel, for that. So lots of things to watch out for today. By the way, I was talking about the auto numbers. There's also L&T that reports today, so there's lots, to watch out for. Let's get you some money market views first up. On the rupee, we have Pankaj Chitlangia of First Basis, who expects the dollar INR to trade in a narrow range of 83.24 to 83.55 for the week. He says the rupee strengthening bias is supported by gradually increasing probability of the US rate cuts and softening dollar index. With no significant data releases expected from the US or India this week, there are no catalysts for significant market movements, and therefore he anticipates low volatility throughout the week.
Well, on bonds, we have Neeraj Gambhir of Axis Bank, who chips in. He says that the 10-year benchmark bond yield traded in a range of between 7.11 to 7.17% for the week, which started on a positive note as US Treasury yields and oil both softened and continued on a downward trajectory. FOMC maintained status quo, and Fed Chair Powell's comments in the press conference were less hawkish than market expectations. US non-farm payroll data came in weaker, further lowering the yields. On domestic front, government securities auctions saw firm demand. He expects the 10-year to trade between 7.05 and 7.15%.
Well, we've got a lot of stock-specific action track for you. Get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We're looking at Pidilite, PB Fintech, Max Financial Services, IRB Infra. Their stocks will be reacting to positive news flow, while we have close to 6 stocks that will be reacting to negative news flow. Dr. Reddy's, JSW Energy, United Breweries, Voltas, IGL, and Navin Fluorine.